Welcome to Market Tea Tuesday,
where the tea is always hot.
Welcome back, everybody.
Welcome, everyone.
We've had some big, good, wonderful things happen this week. And let's start out with the top one, which is everybody loves the calls, and now they're gone. So now when we run your credit, as soon as President Trump signs it, it will be illegal. Now, listen, some companies are so big, they're willing to pay the penalty for it, just like most spam callers. But the good news is that it will stop the literal 100 phone calls, which is so big.
It is. It's so overwhelming to our buyers, our clients. Obviously, we can't stop our clients from shopping around, but sometimes these trigger leads just get way out of hand.
Absolutely.
So
I'm happy to see it go because, we don't want our clients to ever feel like we're providing information, because we're not. It's just that everything on the internet is free game and public access. And we all know information is the new oil.
Yes. And you actually, Miss Ashley Bedford, among Joe and Nick here at Apley, had a little something to do with this, right? You guys did your work and
just a little advocacy. I think it was a team effort too, with lots of big corporations. So I think that's really big for consumers, especially people whose their second language is English, because they don't fully understand.
Yeah.
And so they feel confused because the wording that a lot of them use confuses people, or the elderly people. So it can really lead them into bad scenarios. And that was the whole point of this. And I think that's really important to know.
Yes. Well, I'm excited to see how all that starts, changing the industry and in a positive way, right? It can only get better from here. But
let's dive in.
Yes, let's dive in. So, as many of us already know, the Feds met last week. There was no rate cuts, but it was almost like a little like, oh, okay, no rate cuts. And then at the end of the week, it was like a little surprise, or it felt like a gift when we seen what happened with the
job numbers.
Jobs reports. Yeah. Can you kind of explain that a little bit for our viewers on what exactly happened with the jobs reports?
So we saw like real numbers, I feel like, for once, because so many times like we see revised reports, and I feel like this time we finally saw what those actual numbers look like, which is so huge, because there was only 75,000 jobs added, and I believe that we thought they would see 115,000. And everybody wants lower rates, but with that has to come job loss. Unfortunately, that's how recessions work. The rubber band pulls back, has to go back. It will rebuild again, and will repeat the cycle over and over and over and over. But it's just what has to happen. So it's like almost like a self-fulfilling prophecy, right? Like we want this certain thing, but these other kind of bad things, but kind of necessary things have to happen to get there, right? And so I think that's important to note. So it's almost like that saying of "be careful what you ask for." So.
Yeah. And we ask for a lot in this industry, one of them being lower rates.
And if it means lower rates, I mean, it's just, this was jobs added. So the good thing is, it gave confidence of where rates need to be. I don't think that we'll see anything by the end of this year, maybe next year, because, Powell's not going to make it another term. Like his term will be over. There will be somebody else put into place that we already know that those motions are in action. And so guess what? They're going to try to make everybody happy. And we're probably going to see rates coming down, which is really great thing. So, but remember, it's the perfect time to buy, because if you don't buy now, rates come down 1%. We had 5 million people back to the market.
And I actually just reposted this. There are over 500,000 more sellers than there are buyers. I think that's worth mentioning, just to kind of put things into perspective for potential buyers. The ball's in your court. You have the negotiation power. You have options right now. There's not so much competition. There's not multiple offer. You're not running into these multiple offer scenarios as often as you were a couple of years ago. So this market is definitely one that, if you're a buyer, that you may want to get in right now when, where we are.
Well, and I think a big thing too is we saw the case Schiller for May, and there were four cities at an all-time high, which was New York City, Chicago, Cleveland, and Detroit, which like such a random thing. And
Mhm.
some of the declines that we're seeing, you have to remember that they're a large condo market, and especially in Florida, condos have drastically changed, which I feel like those should be pulled out of the numbers, and we would see completely different numbers. And that's why you're seeing like that Tampa St. Pete area with such negative numbers. So I think that's important to note as well.
Yes. And then
So.
also rental market, it's actually been the highest since 2017. So
Mhm.
that just kind of indicates that there are a lot more renters right now.
Well, that's the vacancy rate. So that's like
They-
there's people
yes,
are buying, yeah.
yeah. So more people are buying. So I think it is very, it shows that this is the norm. People are a little bit more open to
Yeah.
it, understanding that the rates are what they are, the market is what it is, and you got to get in when you can. So have those conversations. We can't stress it enough. Something a little bit more local to us here in Florida, Florida Hometown Heroes, big announcement yet last week. I'm sure everyone has seen it already. Florida Hometown Heroes is back and it will be available August 18th. Please note it's going to be a $50 million. There's $50 million available, not $100 million, because I have seen a couple posts and things going around saying, oh, we have $100 million coming. No, we don't. It's 50 million. If you were already pre-approved and waiting for this program to be released, talk to your lender, talk to your agent, because there are occupation restrictions that we were not expecting.
Mhm.
So things may just look a little different for you. That doesn't mean that you still can't buy the house. There's just different options that we may have to explore for you. I just had a closing today with the 1% conventional program. I love it. I think it's great. It's a grant, so it's free money.
Yeah.
So just have those conversations with, your team and make sure that your lender's doing their due diligence as far as searching for the best product for you.
No, I think that's super important. And another big announcement is that I'm looking at eliminating capital gains tax. I mean, that's going to be really
Oh,
huge
that's huge. Yeah.
for sellers and things like that, and investors and all of that. Um, I think it's going to be a really huge, great thing. And so we'll see how that turns out as well. All those type of things take time. So, um, and again, we're not in a crash. We're just in a price correction. It's modest and market driven. It's okay. Everybody take a breath. We are not going to see a crash 2006 to 2008. That's the thing. Like 2006 to 2008 was because bad loans were being done. Like you could make $10 an hour and buy $1 million house. Well, I don't know about you, but I can't afford that payment. So
No.
I think that's important to note. So yeah, and just call a financial professional. Like, we're here to help you. Like, do you feel like you're stuck in golden handcuffs with that 2-3%, but you need to tap into some equity, maybe to replace the roof, redo your kitchen, pay off some debt, things like that. We have so many options for you. Like, let's look at them and see what that looks like. So,
Yeah, definitely. And stay tuned for next Tuesday because we will be back here with some piping hot tea.
I am excited. I can't wait for next Tuesday. Thank you all.
See you next Tuesday. Bye.